Imagine that you invest $100 in any particular stock and that stock pays you $5 as a dividend. But that dividend keeps increasing over time. It goes from $5 to $6 to $8 to $12. And then on top of that, the share price goes from $100 to $105 to $110 to $120. This is what is possible with dividend growth investing. And in this video, I'm gonna reveal to you how you can be successful with this investment strategy and how it compares to others. First, let's talk about traditional dividend investing. With this investment strategy, and people typically do this because it is a good way to generate additional income without having to do a lot of work for it. And at the same time, it doesn't have the highest level of risk. What tends to happen with this particular dividend stocks is that the stock price tends to be quite flat over time. And some people like this because it provides a degree of stability, but at the same time, it limits the growth that a stock can have in terms of its stock price and also the dividend payments themselves. So you're essentially making the same kind of return, maybe it could be from like 3 to like 6, 7, 8% over time, even though you've held on to those stocks for maybe 5 years, maybe 10 years, maybe even 15 years. In contrast, what is possible with dividend growth investing is that you can have first like the price of the stock appreciating over time, and more importantly, and sometimes even a very powerful thing that happens is that the dividend payments also rise significantly over time. So your return on investment for that particular stock or set of stocks is not static, but it's something that continues to rise and grow over time. And that is really the beauty of dividend growth investing, the fact that it provides you with the higher return over time, and it doesn't really take a lot of time relative to other investment strategies that are more time heavy. Now, the question for this type of investing, of course, is what kind of stocks should I invest in to be able to be successful with the dividend growth investment strategy? Having a portfolio of dividend stocks myself and also having the access to some really successful dividend investors, here are the main principles and the main things that are important to follow to be successful. The most important thing that I've noticed over and over is the quality of the company that you invest in has to be very high if you want to be successful in this investment strategy. This means that the company has to have or be in the process of developing a really strong competitive advantage that allows it to stay ahead of the competition, as well as a market that's consistently growing over time. And as you do your research, you'll realize that this can happen in pretty much any type of industry, such as like real estate or health and health services or technology even. The second thing that is very important is that the company has to have a solid financial position. If you like Excel, using a tool like Y-Sheets, you can get a company's financials just like this. So Apple is a really good example of a dividend growth stock over time. And just by doing this, you can get all kinds of information such as the financial growth metrics, the key metrics. So this is very helpful because, for example, this can help you find the dividend yield, which you can see this number right here, and this is on a historical basis. You can also find information on the financial statements themselves. So for example, in this case, the cash flow statement, the balance sheet, and the income statement. Now, when it comes to the financials themselves, there's a couple of things that I recommend that you look for. So obviously, one of the typical metrics is to look at the revenue growth that the company has had over time. You can also look at the net income and making sure that hopefully the company is generating more profits over time. One that I really like and I think is really important is to look at the free cash flow of a company. So this is something that you can find on the cash flow statement, and you can see the free cash flow over time. What you want is for this number to be consistently growing. Other very important metrics to look for is in the balance sheet, making sure that the company has a lot of current assets to be able to cover its current liabilities, because if that's not the case, then the company can have liquidity issues. You ideally want companies that have a very low degree of debt. Apple has a little bit higher debt than other companies, and that is because the more debt the particular company has, the more risk there is that things are going to go wrong and then the company can run into financial trouble. And lastly, one of the things that I like to look at is that the shareholders' equity is consistently growing, as this number is quite important since it helps to kind of represent what the value of the company is to the shareholders. Since it helps to represent the difference between the assets of the company and the liabilities, and generally you want to see that difference growing over time as opposed to shrinking. The other thing that's really important is that you have a competent management team that is running the company and that is getting compensated properly according to good financial performance and not some other BS metrics. To assess this for yourself, you can go on Google and look at interviews of the company founders and the top management. You can also go on reviews for the company itself, where the employees will tell you what they think of the management team. And you can also, of course, read about the company's management from like writings that they've written or just reports that are published out there. Now, when it comes to dividend growth investing, what's also essential is that the company has a decent history of having paid consistent dividends in the past. So I recommend that you look at least 5 years of a consistent time period of paying the same, or ideally raising the dividends over time. This is where you can also use Y-Sheets. So in this case, I'm going to get the dividend history for Microsoft, and I'm gonna get the entire dividend history. If you want to get specific numbers and dividend metrics, we have many tutorials that you can check out on our channel about those topics. But as you can see, in just a few clicks, we're looking now at the entire dividend history for Microsoft, and you can see that this goes very far back into the past. So you can do a really in-depth analysis of the dividend payments of the company. And in this case, you can see that for Microsoft, the dividend payment has been consistently growing. And this is a really good sign that this could be a potential good dividend growth investment opportunity. Individual dividend key metrics are also available, and this makes it very easy for you to be able to compare a whole bunch of potential companies that you're interested in investing in one single goal. So in this case, we're going to use the WISE function. We're going to select this list of tickers right here. This works for international stocks as well as stocks listed in the American stock exchanges. We're going to select these two typical dividend analysis ratios, so the dividend yield and the payout ratio, and we want this metrics for the last 12 months, the trailing 12 months. And this is going to give us the information, as you can see right away. Now, some companies are not paying any dividends. This is why you see some of them, the numbers look the way they do. But generally, like I said, for those good dividend growth investment opportunities, the dividend yield is not going to be as high as you would see on other stocks that are hardly growing or in fact shrinking over time. And generally, you want a low payout ratio, because this means that the dividend payment that the company is currently paying is sustainable over time and not likely to get cut in the future. And the last part is that you pay a reasonable price for the stock. For this, there are many different dividend valuation videos that you can check out on YouTube, but I just want to share with you an example of what is possible and what you can build for yourself. So this is a template that follows the Gordon growth model to find the intrinsic value of a dividend stock. So in this case, all we need to do is, because the data comes from Y-Sheets and Y-Sheets formulas, all we need to do is just enter the different inputs, and we're gonna get the result right here, along with a whole bunch of different graphs and metrics that we can also check out. So in this case, the market return, let's say we're gonna put it at 7.5%. Perfect. Now the formulas are slowly going to change and update the number. The personal IRR, so in this case, let's say I want to earn 10% on my money per year, and the perpetual growth rate, we're going to put it at 1.5% just to have a very conservative number. And as you can see, now we have some of the different values populate right here. So we can see that right now it seems that Microsoft stock is trading at $424 per share, and according to our assumptions, it's really only worth $50. Now, of course, we can change the numbers and get a completely different result, but you get the idea. Now, the key thing as you embark on your journey of dividend growth investing is that what you'll see is that the really good dividend growth investing stocks, unlike traditional dividend stocks, don't have the highest dividend yields. So usually they may have a lower dividend yield. You know, maybe they're paying like 1%, maybe they're paying 2% relative to the other stocks that are paying higher yields. But what they have is they have a history of the share price of the stock appreciating over time, and they also have a history of the dividends per share growing over time as well. So there you go. Now you know everything you need to know about dividend growth investing. If you've enjoyed this video, make sure to subscribe to the channel, and I'll see you in the next one.